So glad you could join us here on a Wednesday. We're halfway through the trading week now and wanted to take a look at this dollar index. Sometimes that can have a bearing on our ag commodity trade, of course, with all the Chinese trade negotiations going on and some USMCA negotiations going on. The dollar is kind of lurking out there in the backdrop as well. So right now on the March futures, we are trading that dollar value 150 points higher this morning. It is now at 96.020. It did get as low as 95.750. So it's now in the upper third of the trading range today. The June contract is now 140 points higher too. Now, if we look at our energy markets on the crude oil trade today, this is West Texas Intermediate crude. Kind of fascinated by the movement here. We have the April contract now up $1.73 in value today. It is priced at $57.23 per barrel, and that's after we posted a low early this morning at $55.72. That's quite a turnaround. That's basically about $1.50 off of its earlier low this morning. Now we switch over to the grain markets and we take a look at the corn market with kind of a confused eye, I guess you would say today, where you had the corn going higher overnight and then turning lower today. And as we get closer to the end of the month, some analysts are a little perplexed as to what this all means. Now, the March corn is down 1 3/4. You have July down 1 1/2, and you have December down 3/4 at $3.95.5. That's only 2 ticks from our low of the day now. And if you look at the soybean trade, on the soybeans, you currently have the nearby March 3 3/4 higher at 907.5, and July is 3 3/4 higher at 934.25. But this has been about 7 cents lower than where it is now. So at one point, they actually went down below water, came back. Now in the wheat trade in Chicago, we have the trade now mixed. March up 1/4 cent, but July down 3/4. So straddling the fence in the wheat market now. In Kansas City wheat, you have the March contract now 3/4 higher at 436.5, while July is unchanged at 455. I want to go to Brian Hoops. He's the president of Midwest Market Solutions in Springfield, Missouri. He joins us now. Getting very mixed signals here, Brian, out of this grain market overall as we head into First Notice Day coming up tomorrow.
Yeah, a lot of times First Notice Day will put in a little bit of a low for the market. And if we get all the rolling done maybe ahead of time, maybe we've already put that low in, we've dropped the wheat market about 80 cents during the month of February. So we are bound, I think, to see a little bit of short covering anyway going into trade on Wednesday and Thursday. It's the last couple trading days a month. So got to believe that we're going to see some short covering that'll help us get a little recovery because there just isn't much news out there to sustain a rally at this time.
I was looking at some weather updates here this morning, Brian, and in South America, it looks like conditions are just almost ideal as far as trying to finish out that Argentinian soybean crop and actually the second corn crop in Brazil, the safrinha crop. It's getting off to a pretty good start, isn't it?
Yeah, it is. They're getting a little farther along in their growing season, and the second planting crop is going in at a great pace. So average here is much above normal for harvest and for planting of their corn and soybean crops. And right now, the conditions really have stabilized. They were very high in December. It took a little deterioration in January due to some dry conditions, but there's been a lot of rains that have really stabilized this crop, and that has helped to increase yield potential for corn, soybeans out of South America.
Something to keep an eye on, that's for sure. That's our main competitor right now. Brian, we'll come back in a moment and we'll take a look at our cattle and our hog trade on a Wednesday when we come back. And we're back talking with Brian Hoops of Midwest Market Solutions about the markets. And as we glance over at our livestock trade, on the live cattle board, we're going to say goodbye to the February contract tomorrow as it will be going off the board here. The April contract is now a nickel lower at 129.88. This is an incredibly quiet market here in the cattle complex today. We have June just 8 cents higher. We're at 120.13, just not doing much of anything right now. The August contract up 8 cents at 116.05. So we're basically only moving about 3 ticks either side of unchanged here so far in most contracts. If you look at the feeder cattle trade, right now you have the March 33 higher at 143.78, and you have the April contract 22 cents higher. It's a 147 even per hundredweight, and you go through, well, from May through September, we're just narrowly mixed. Meanwhile, lean hog trade. Lean hogs have been quite a story. They were sharply higher yesterday. We opened lower this morning, then they went to higher, and now we have the nearbys back lower again. April lean hogs down 40 at 55.33, the May down 20, and you have all the deferreds from June on out, anywhere from 25 to 50 cents higher on the day at this point. Brian, it's hard to get a good handle on what's going on in the livestock trade today. What's up?
Yeah, we're seeing some really choppy activity, waiting for some more cash cattle trade to develop. There was just a string of cattle at 205 in Nebraska being reported, but very little numbers there, so really can't judge a market by that. But we do have show list numbers that are larger because cattle were carried over from 1 week to the next, and so we may see a little bit more cattle trading sooner rather than just very late on Friday, like has been the pattern here recently. But new contract highs scored once again, so technically positive in the cattle market. And the hog market has been very kind of a wild ride early in the session where we gapped lower opening and really sold the market off, but we've come back to virtually unchanged in the June contract and minimal losses in the April contract. So there's a kind of a momentum that has really slowed down here recently, but there was some fireworks right off the opening.
How much is the trade related to end of the month positioning here today?
Well, today and tomorrow I think will be pretty exciting. The last time we had a major pullback in the cattle market, it was on the end of the month of January the 31st. You can go back and look at some charts, and there's a huge outside day reversal in the cattle, and really no fundamental reason other than it was just some profit taking off of long positions in the month of January, and we certainly could see that again tomorrow trade with the cattle market being up sharply once again.
Oh boy, thanks for reminding us about that deal. All right, that was a huge wide swinging day. Okay, well thank you, Brian, I appreciate that. Thanks for the heads up. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. There is that, isn't there, as far as potential for a wide swinging market yet.